All right, am I on? I am on. Oh man. Let me get my settings right real quick. Hold on. Uh that. Let me see here. All right, cool. Let's go ahead and we'll start this off on the weekly. Weekly candle just closed. Let me see. Ooh, I don't know if you can see this notification at the top, but a long just got liquidated on BitMEX. But yeah, so weekly candle just closed not too long ago. This is interesting. So I don't know if I would call this a pin bar. I guess I would, because the wick is more than 2 times the size of the body. But you see, not this most recent weekly candle, but the week after that, we got this nice little swing low. And it's a swing low because each of the candles on the sides of it have a higher low. And it came right after this large dump. 2 small spread candles preceded it. Let's look at the volume on these things. Right now I'm looking at an index of, I think this is Bitfinex and Coinbase. I actually don't want to look at that. Bitfinex, Coinbase, and I also want Binance because Binance has good volume. And let's actually throw in Bitstamp as well. Cool. So if we're looking at the volume here, the stopping volume, this kind of came up. This was good, more volume than the previous weeks. This showed a good amount of buying stepping into the market. This showed a slight increase, right? So this candle finished higher, and this volume was less. And now let's see if we're at any type of resistances. I don't think we are. But this level right here is important because that's where we currently are. Essentially, before we blast it off to what looks like approximately 8.5K, we came up here, traded here, and then dumped before we just, completely destroyed this level. So kind of the same thing right here. We stopped, we came up into this level, and now we're going to see if we kind of reject it real quick for a week before we, boom, pop up and destroy this level. You see these tweezer bottoms right here. We didn't get tweezer bottoms right here. I don't consider these tweezer bottoms because if you look at this, I'll show you why. For me, tweezer bottoms, the second wick does not clear the first one. And you see, I guess you can't really see it, but this wick did not clear the wick before it. It actually had a higher low. Whereas right here, this low did clear this wick. Does not tweezer bottoms for me. And then I don't consider these 2 candles tweezer bottoms. Okay, cool. So as far as resistance, that's where we're at. And really, you can take it all the way back here. Nice resistance level. And we'll actually zoom in. We'll mark that level out a little better. But we'll actually leave it here just because it fits so well. Yeah, that'll be our resistance. This will be our support. Cool. Let's zoom in. Daily view. This lower wick right here showing selling pressure coming in, but then it got bought up. Happened at the end of an up move. So you have this small spread candle at the top, low volume. These 2 daily spreads were decently large, but the volume was well below the moving average. Volume's been pitiful in this up move, which is like not what you want to see. So that's bearish. But let's just mark out some very objective levels before we start calling things bullish and bearish. So this is the pivot order block. It was bullish at first, clearly turned bearish here and here, and now here. Here's our support level. Let's see. There's for sure a bullish 4-hour block here, but I just won't mark it because I think this line is good enough. What is important to note? Let me go back to the weekly real quick. The month of August is coming to a close, and it looks kind of bad. Depends what this wick looks like. August ends in what? About a week? So we'll see what this wick looks like in a week. That'll tell a lot. If this wick gets bought up, that'll show that, okay, we had this bullish move here in July. In August, we traded low, but that got bought all the way up. And so we'd expect continuation from there. But if August finishes low, it already cleared the low of July. But if it closes close to the low, then that'll just indicate more bearish momentum for me. Yeah, I can't really think of what's important to note with our levels here. This is a high probability short area just because this is the highest daily close we've had for this range. And so here, when we had high daily closes with decreasing candle spreads, I mean, look at these candles. These are almost the exact same. Yo, shit is almost deja vu. Look at this. Look at here, and then look at here. You have decent candle spread, small candle spread with upper wick that is longer, hanging man type of candle with a small nose and a long tail, inside consolidation, which looks like the candle that we're on, and then dump. So we'll see how that turns out, but these fractals look ridiculously similar. I guess what we can do is we can look at some B bands real quick, and then we'll look at the guppy. That'll be it. So on the weekly band, didn't quite touch the bottom of the band, so I don't know if this is going to be a good bounce. We might still try and target 5.5 ish or lower. Excuse me. But we do want to keep out for the weekly median, which is currently at 7.3. Should be good resistance. On the 3-day, we're currently at the 3-day median, which is in confluence with bearish resistance. Easy short opportunity here, and it makes a lot of sense. And they're not compressing the B bands, that is. Daily compressing very hard, getting very tight, expecting an expansive move very soon. Again, at resistance at the top band, so we might try and shoot for the median or the bottom band. We'll see how that works out, but the daily is squeezing, and when the daily squeezes, we tend to see some shit. So I can't think of any time the daily is squeezed this tight except for maybe right here, and of course we dumped here from 10K. Again, excuse me, I'm kind of tired. 12-hour, I mean, not a ridiculous squeeze, but again, near the top band. This is looking kind of dumpy, where we're not really getting any type of bullish follow through at all, and decreasing volume on increasing price, all well below the moving average. 4-hour looks like it's about to squeeze and do something, kind of using the median as support. Median is going up, which means the 4-hour trend is up. So we'll see how that works. And it's not that steep as like this 4-hour B-band median, which lets you know, oh, for sure the trend is going down. This is kind of like teetering, like a retracement, trend is going up type of thing. Look at the guppy real quick. And then I'll show you what I want to show you. All right, so the guppy really hasn't made up its mind. Okay, fuck it. 3-day bearish. Currently in a possible compression of the guppy. So a decompression down would be a very bearish move. Daily bearish, same kind of idea, flirting with the slow EMAs. Fast EMAs have compressed, and if they decompress and expand downwards, that would be an extremely bearish move. 12-hour, really at the top of the slow EMAs, have not closed above them, only wicked. And so again, decompression down would be ridiculous. Or we might just bullishly pop up. I can't find a time where we were near the top of the slow EMAs and then just expanded upwards. Maybe this one, but that's not even like a very large expansion. Yeah, so that doesn't, there's no great precedence for this right here. It looks kind of bad. 4-hour starting to turn bullish. We're getting some good long opportunities. I went long around here, the close of this 4-hour candle, and close kind of up here ish. Just because I like the move, I just wanted this expansion. You see how these slow EMAs, or the fast EMAs, excuse me, for the guppy have turned light blue again. They expanded bullish. I would have liked a larger expansion. This expansion was less than this one. And so that's showing me that the bulls, you know, their impulse moves are getting weaker. And so I closed, didn't really like that. But the dynamic support is still right here around where the slow EMAs are. But we're really twisting into ourselves, and the guppy really hasn't made up its mind. But if you did want to short, now would be the time, because the fast EMAs are light blue while the trend isn't really confirmed. And when that happens, you get situations like this where the slow kind of turns blue for a minute, but the trend hasn't really shifted. And so it's like, okay, good short opportunity. Somewhat here too, not really, but yeah. So that's the guppy. We'll look at, all right, I guess this is really all I wanted to show you all. That's really what I'm paying attention to. Pretty much this wedge. Now it's a very short-term wedge, but I'd be a fool to say it doesn't exist. Where that is your line of support. So that's your line of support. This is, trying to figure out how to draw this. I guess that makes sense. This is your line of resistance. Cool. So I mean, this is pretty much what I'm looking at. I mean, it's definitely a wedge, and it definitely looks bad. You can see the volume steadily decreasing here on this part of the up move. Hold on real quick. People keep messaging me. Do not disturb. Decreasing volume here, decreasing volume overall here as well. The only bullish deviation you see really from the decreasing volume from like here to here was pretty much the nonsense of the pump when MEX went offline, and then the ensuing dump that literally retraced all of it. But other than that, I mean, the volume's very much been decreasing overall for the range, and so it doesn't look good. Excuse me, I will say that. Also looking at the 200 EMA on the 4-hour, currently serving as resistance for price, holding it down. So we'll see if it can close up here. Doesn't necessarily seem likely. For the 12-hour 200 EMA, price still below it. That's bearish. Daily still below it. That's bearish. 1 hour, we probably turn into support. Yeah, it's kind of support, so we'll see how well that holds up. We've pretty much been oscillating around it. But I mean, that's pretty much it. This is really the biggest thing I want to bring to mind. Just this decreasing volume profile with this wedge type price action, tightening pattern as price, comes to the nose of this wedge. So now let me actually show the Wyckoff consolidation range. I'm scared to call it accumulation or distribution in any one direction just because shit, you really don't know. But this is for sure a sign of weakness just because the way the volume expanded here as price came below the trading range. This is for sure an up thrust followed by a test. Here and here. And that's because of the nature of the volume profile. As price came to the top of the range, it just wasn't powerful. A lot of selling happened right here. I don't know what was going on, but that's a lot of volume, at least on Bitfinex. MEX offline pump, clear manipulation here, completely retraced the whole thing. Large cumulative volume, right? This wave was featured no bullish fight at all. And now we've kind of been teetering. We're at the top of this range on very low volume. And so a lot of volume comes in on these wicks right here for selling. The volume is green because the candle ultimately closed higher than the low or higher than the open. But because the wicks are so long, you have to understand this volume is coming in on the selling. And so a lot of selling happened right here, and then a lot of selling happened right here. And then the pullback can be kind of bullish on low volume because it's showing, okay, people aren't really trying to sell. But at the same time, the reach for higher prices on low volume is not the greatest thing either. So we'll see how things turn out. We're currently at the top of the range. If you did want to go long, here was a very high opportunity. You kind of missed it if you didn't. But I guess you could FOMO into it now and just have a loose stop or whatever. But this is like, it's not a bullish case, but I guess it's bullish. It's very important to understand Wyckoff distributions for accumulation. I just said distribution. Wyckoff consolidation schematics for accumulation don't always need to have a spring. So that's why we don't really have a spring here. But the sign of weakness was not good. It shows like redistribution after an already, after a sell-off. It shows more selling coming in for the range. These pushes above the trading range with a failure to hold support are not bullish features. This is holding support, and ultimately the question will be, will it hold? Don't really know. Something we can look at though, and we kind of showed this yesterday, so maybe some divs between here, pretty much equal highs on the closes with a lower low here. So that's a bearish exaggerated divergence. Let me show you all. Oops. Images. Divergence. Cheat sheet trading. So this is what exaggerated bearish div looks like, where the blue line is price, the red line is the oscillator. You have equal highs on price with the oscillator dipping down. That seems to be what we're seeing here with equal highs on price. Let me turn this. to a red line, make it a little thicker so you can see it. So we're getting about equal highs on price with the oscillator sloping down. Textbook bearish exaggerated divergence. That's just the B band percent B. Let's look at stochastic RSI. Kind of equal highs here as well, slightly higher high, but then I mean this really dipped down. And momentum really shifted the RSI down. So let's take a look at the RSI now. Fuck. I did not mean to pull these EMAs out. Yeah, so momentum on the RSI really fell off here. And so when we look at the RSI, it's kind of holding above 50 on the 4-hour, but it's pretty much floating in like no man's land where it's not really bullish or bearish. It's kind of in the middle. If we zoom in, maybe give some indicator, yeah, same thing in the middle. 12-hour in the middle, daily in the middle. There's really nothing to be said about the RSI right now. Let's see, another oscillator that's good to look at is the awesome oscillator. So this is good for bulls, equal highs, and then the awesome oscillator actually made a higher high. So that's dope. If you are bullish, oh, but on the 1 hour, it's a lower high. Oh, but it's also a lower high on the 1 hour. Okay, cool. Yeah. So if you're bullish and you're looking at this, the exaggerated div is not there, but there are no bullish divergences. I don't really know if you want to run with that. And the last thing we'll look at is the ultimate oscillator. Make this line thicker. Saves default. Cool. Ultimate oscillator. On the 1 hour. Slight bearish div, but not large enough for me to care to show it. Here, no real div. This was a divergence, and of course this resulted here, and no real divergence here. All right, so that's pretty much what we got. That's what we're looking at. And so just pay attention to this wedge. Watch out for it. Don't buy the top. If you're not already long, you kind of already missed your chances. So, I mean, unless we dip down and hold a higher low here. So, that's really all I have. So, I will see you all later. Things look bad.